Good morning, welcome to the Market View for Wednesday the 4th of June 2014. Starting off with the 30-minute chart, again another very quiet and boring day. The market just trading a maximum of, let's just have a look, from the high down to the low, it looks around about 50 pips. 52 to be precise, so another very quiet day for the pound there, stuck in this sideways range. So again, not a lot to report there, unfortunately. Just a very quiet sideways day, just hovering around the 167.50. Trades above that for a while, and then kept coming back through, and has then since moved significantly through it, and now we're currently trading around the 167.22 area. In the daily chart, we can see this as we look at the retracement areas here. I'm just going to get rid of this line just to make things a bit easier. We're through the 62, so we can remove that as well. I'll just draw that back in, and this time remove the right line. And there you can see we're heading back towards the 62% retracement there in the daily chart there at 167.13, so about 6 or 7 points off that at the moment in the 30-minute chart, which we've noticed moving to the downside there. So in the daily chart, it's fairly quiet. Like I say, this bit of a pullback. This is a crucial line, by the way. This 76% retracement here. This is crucial because this is, as far as markets work, market move higher, pullback, and then if it's going to move higher, it's going to move higher off this area. So do watch the 167.13 closely there. And in the news today, we've got all-day meeting with the G7 meeting, and then just 9:30 we got services PMI from the UK and ADP non-farm employment, which is the weekly one from the US. Not too concerned about the weekly one. Trade balance at 1:30, and then the ISM non-manufacturing as well. Now the G7 meeting is an awkward one because we don't know what's going to leak from that meeting to the media and then factored into the market, so it's something that we don't know about. So if you see some volatility outside of the economic news items, that's what it is going to be. Just before we close, I've been asked a question about the iVolatility website, so let's just have a look at this. You can see that it says at the top here you can join for free. Make sure you got the address right first, so let me just cover that. iVolatility.com. Join for free, sign up, and then when you've signed up, you can log into the account either at the top here or down at this page, which will come up if you click on login without actually putting the details in here. So just log in at the top of the screen and then left click in login. Next you want to type in DJX, which is the code for the Dow implied, and then click on go, and this brings up the DJX implied volatility grid, and then the implied volatility chart is the one down on the right hand side. Left click on this, and there you have the table with all of the details in for the implied, and the one you're only interested in is the lows that are made in the mean, which is more or less the average there. 902 is the low for the Friday, which is 23rd of May, and what I'm just going to do is to zoom in a bit on this one just to make it a little bit larger there so you can see it. And you can see there that the historic volatility, the blue line, is heading back down to these lows where we've seen corrections take effect before, and again you can see we're back in those levels. So it's on the cards. It's just a matter of when it's going to happen. And having watched the Dow and traded the Dow the last few afternoons, the market is struggling to move to the upside at the moment. Quite a narrow range for the Dow yesterday afternoon as well, and yesterday evening, but predominantly still moving to the upside there. Right, well, that's it for me today. I will see you in tomorrow's market view. Have a great day, and as ever, thank you for your support and also for watching.